Hello, everyone. We're back. Today, our session is going to be on personal financial statements. I'm Herb Strather. I'm your coach, Herbert from Herbert Street. Now, we're actually having a real class, and we're into our conference room where we have a screen and we're going to go over the numbers. And we're having class today, and we have our students. I'd like for you to meet them. Say hello, everybody. Hey. Okay, so we're going to have some fun, and we're going to go over personal financial statements. You'll find this in Student Corner. Just go there, download it, and get it in front of you. And once you get it set up, get your cup of coffee and go and get set, and let's go through it as the students here are going through it with me right now. This is a real live class we're teaching. So we bring it up. The very first thing we have is the personal financial statements form sheet. So you type in the date and just put in the date slash, I'm going to call it 7/15/15/17. That makes it July the 15th. Okay. And it's important for you to set the date, because I would like you to go back and be able to say, hey, this is the date that I started and this was my balance sheet. So your name, address, suite, telephone, city and state is important, and your social security number. But just put in your last four numbers of your social security number, because your bank can always ask for those others, those other numbers. And your date of birth, that's also important. You can put your date of birth in. So a personal financial statement is something that many of us do not use even our entire life. As I was telling the class, when we go get a house, a mortgage application, you do a semi-financial statement. You do list the amount of cash and much of the information that you have. And it is very similar to a personal financial statement, although there's way more information than that on a mortgage application than would be on a personal financial statement. And a personal financial statement would have some things that you may not find on a mortgage application. So, number one, and if you did an auto loan even, it's the same thing. Personal financial statements is basically used for commercial mortgages. If you're going to take out a commercial mortgage, then you're going to need a personal financial statement. Now let's just go over it. Let's say that when you first start off, you have really no money, no large sum of money. So we're going to put in there under cash in hand that you have $1,000 in cash. And let's say the cash in the bank, you have $2,500. You have no securities yet, but we want you to type in a number. Make sure you put in a numerical number in each column so that the sheet will add up. Your cash value and your life insurance, which is the actual cash value, you should be able to find that on your insurance statement. It's not the face value of the policy, it's the net cash value that you have in there. And then you may have an IRA or something like that that you have not yet gotten yet. And I'm assuming you're going to be, well, we could use different dates, but we can take someone that's maybe 30 years old and they're having some difficulty. Well, I'm not going to put a date on it because it could be applicable. You could have got rich, got caught up in the recession and had to start all over again. So this adds up. Your total cash and short-term assets. Now your personal property, this is your clothes, your personal stuff. You have to put that in there, maybe a third or 25% of what you really bought it for. The banks are not going to use it as collateral. They tend not to want that stuff. Automobiles, yes, you bought your automobile, so it's $15,000. Hope it's American. Your art collection, if you actually have a real art collection, that's true. You may not have one, maybe that have value. That doesn't mean that you don't personally think your art is great. I understand that. I got that. I'm talking about the things that have known artists, as lithographs and things such as that. You may have paid $700 to $1,000 for the piece, or maybe in some cases less, but it has real value. The artist has gotten a little bit more famous, blah, blah, blah. Otherwise, just put it all into personal assets. Now, your real estate owned, and your business and joint ventures, that's automatically filled out when you do the schedule. So you don't have to type anything right there. Your intellectual property, if you have really acceptable intellectual assets, something you've created, something you can patent, then you can feel free to type it there. So in this case, I had been playing around with some of the numbers, and so you see some numbers, but let's see, let's go all the way through as we create this. So for practical purpose, the real estate and the business right now, we won't count these as legitimate numbers yet. So you got short-term assets of liabilities that you owe. Let's say if I borrowed $500 from Tony, I owe him, but I'm probably not going to put it in because I'm giving his money back next week. Right, Tony?
That's right.
All right, man. So I give him his money back. So I'm not going to worry about that. But if there's something financially that you need to put in that is an obligation that somebody might sue you on or something, you should put it in there. Your personal credit cards, let's say they're running about $4,000. Maybe you have $10,000 worth of credit, and you got $4,000, so you got 60% of it available, and you kind of rotate it, and you take it not higher than 40%, 35 or 40%. That's a good thing. There could be other pledges and obligations, taxes payable on gain on real estate. When you sell your real estate and you sell it for a profit, you have to pay taxes on it. Capital gain taxes, not ordinary income, which is less, but you're supposed to put that in there. That it would not be applicable if you're just really getting started out, of course. And then you have your debt on real estate, that's on the schedule, and you have your debt on the businesses, that's on the schedule. I noticed that I have Schedule A and Schedule C. So, I mean, what happened to Schedule B? Let's just call this B for, is that okay? Let's just change that around. Okay, so let's go down to our Schedule A and our Schedule B, and let's fill it out. So let's say that here you have to put your address in. In this case, we had 18, we used a 4 flat on Greenfield. We think that the market value might be $175,000. There's 98 due. And let's say that you don't have to stretch it. Let's put the market value at $160,000 for right now. 98,000 due, equity 62,000, cash flow is 7,200. The bank wants to know the cash flow. They're going to take your tax return and match it to the financial statement and go right down and see if these things match. So you can't get crazy and wild. So property 2, let's say, is on Schaefer. 12,000 Schaefer. I hope that's not an address. And then say the market value is 50,000. Says a duplex. And that you have a mortgage due on it of 35,000. You have equity 15, the cash flow is 48. And then you have these other assets. So the cash flow is 48, so we subtotal that. Now, if you own multiple assets in a limited liability company, then just type them in, the address, the market value, the mortgage due, the equity, the exact same thing. And I've used a few examples here already. So now let's take a look. It all calculates, it all just automatically calculate. Now, if you have a 1099 that you get paid, and let's say you are a computer tech and you get 110 grand from one of the companies, you might want to consider forming an LLC or even an assumed name and forming a company so that you can have separate value. So the company gets the 110. You take a $50,000 salary out of it and leave $60,000 profit, so your company have value. Your company is $60,000. Otherwise, that value does not hit your financial statement at all because your salary is not a part of your personal financial statement. Yes, it's not on the balance sheet. I wouldn't say it's not a part of it because people do want to know what you made. But in the example I just given you, you would have a $60,000 value, and at a 20% return, at a 20% cap rate, it is worth $300,000. Otherwise, it would not be worth anything. You understand? So let's just say that it wasn't worth anything. Before you listen to this, it was worth nothing. What is your net worth? Let's just see. You got 2 properties you bought. Let's just say that you got a house, and the market value of your house is $45,000. Yet you owe $98,000. So you have a negative value. You have no cash flow on that either, let's say. Or you still could have a cash flow on it. You still could be renting it out with a positive cash flow with a negative equity value theoretically. Because the question is that, and then it really becomes, here, this is a good question. What happens if you're in a negative position but you have a positive cash flow? Then by definition, you have a positive asset. You have a positive asset. So if you have a cash flow on it, you cannot reflect a negative. That means that it's worth more than the mortgage, because after you pay the mortgage, you still have a cash flow. So in this case, the market value we're going to make at $120,000 because you have a positive cash flow. Say the cash flow is even $3,000 or $6,000. Well, at a $22,000 equity, I would say your cash flow is maybe $3,000. That's 15% return, somewhere close to that. Oops, $3,000. Okay, so what do we have here? We have a net value here of $279,000. The debts on the real estate is in there. Your debt on your business is none because you have no business assets at this moment. But you do own some real estate. Oh boy, business assets, and you have no business assets. I'm sorry. We got to straighten that out a little bit. Oh yeah, okay. Sorry about that, class. The business asset is not 212, it's plus. Let's go down to the column here, because you have to straighten these things out yourself sometimes. So this is the estimated value. There you go. Now that should have straightened that out. It's 0 there. So it's 212 is your total in real estate, which is right here, your 212. That consists of your 2 houses and your 3 assets that you might have. And in one example, your market value is 20. Your mortgage, the mortgage you do that you owe is greater, so you have a negative value. You have no cash flow, it's vacant. We could even make it more dramatic a little bit. So, you have no value whatsoever on any of your businesses. So the grand total is 212 of between businesses and real estate. 182 is your debt, so you have a real $30,000 worth of equity there. In this case, look at your net assets, only $47,000. Okay, $47,000. Now, by the way, let's go back and split up that LLC that I suggested, and let's take and add that $300,000 in value with no debt, and put the $60,000 on the side. Take it out of your personal receivable that the company pay you, and put it in your company, and let your company show it as a profit rather than you show it as a salary. Let your company show it as a profit rather than you show it as salary. Now look at your net worth. Now finally, for the last 3 minutes, just bear with me. We'll do a BYOB, where I come in and loan you $25,000. You got $2,500. Now you got $27,500. $27,500. And you borrowed that money out. The borrower was your company, not you. So we put the debt on your company. Bam! Look at that. You got $25,000, $27,000, and you attached it to your company simply by letting your company borrow it. There's also another way to do it. When you get ready to borrow the money out, you can take and attach a piece of real estate to it, and so make it a mortgage. You could do it like that. In that case, I would put it in the real estate column. But if you leave it as an unsecured $25,000 loan, secured shareholder transaction, then you're going to have to reflect it somewhere, and it'll be a standalone. So, class, do y'all have any questions on any of these things we've talked about today? No question. You understand 100%? Well, that's good. If any of you have any questions, please free just to take and email us through Student Corner, and we'll be happy to answer any questions. This is your coach signing off, and I hope you have had a valuable session on personal financial statements.